Hello, everyone. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. I'm very much excited to welcome you to yet another promising edition of the Extreme Speed Live Technical Analysis session. But before we kickstart the session, let's run through our daily routine to confirm that we are all on the same page here. So if you can see my screen and you can hear my voice loud and clear, please let me know in the comment section by typing hi in the comment section, as your highs will confirm that we are all on the same page and that we can relate together. So I would like to see your feedback, please, in the comment section. So I will load up my chat while I look forward to your comment section, your comments in the comment section, of course. All right, so let's see what we have here. All right, okay, I can see a handful of comments in the comment section already. So I see Terry Yima. Good morning to you, Terry Yima. Thank you very much. Jojo2288. Good morning to you. I can see Jobula. Jobula, I hope I pronounce your name correctly. Good morning to you, and thank you very much. Let's see. Okay, I think that's all we have here. Okay, 88697. Good morning to you. Thank you very much. And on that note, I will take this as a positive feedback that we are good to go this morning. So once again, you're all welcome on board, and I'm very excited to welcome you to the second day of the new week. My own name is Sheriff Daramola, and for the next 1 hour, I'm going to be your host, as I'm going to be taking you on a trading journey into the financial market. And of course, we shall be using simple and fundamental tools such as trend lines, key levels, and of course chart patterns to gain valuable insight into the historical price movement of the assets on our watch list for this week. Well, since the beginning of the week, we have four major assets which we have been monitoring so far, which includes the US All Spot. We also have the USTech100, which is popularly known as the Nasdaq, and we have the GBPUSD and the XAUUSD, which is popularly known as the gold spot. And in fact, in the last 24 hours, we have been doing pretty well across board, though the market is still a little bit risk averse due to the conflicts currently going on in the Middle East, and everyone is watching to see if there could be some further escalation which could potentially implicate the current market conditions also. So we are going to be looking into the charts to see how to understand the psychology behind the price movement, and of course use that information to strategically position ourselves for the New York session today. Now, for those who are joining us for the first time, you highly welcome on board. I'm very excited to have you guys around with us this morning. Now, you may be asking, what is this all about? Well, we gather here on a daily basis as technical traders, where we come to review our existing positions if we have any, and of course use the information we identify on our charts to position ourselves ahead of new trading opportunities, of course ahead of the New York session. And we do this every day, 10 a.m. UTC, 11 a.m. West African time. And I do encourage you to stay tuned in so you don't miss out on the valuable insight we shall be deliberating on today. And the more time you spend with us, of course, the better you get to understand how our strategy works, and eventually be able to use the information you gather in this community to make your own independent trading decisions. So I look forward to seeing more of you in this community. So once again, you are highly welcome on board. Now, with that being said, here we shall be diving right into the business, and as usual, the first thing we usually do is to check on the economic calendar. Now, for those who are joining us for the first time, you might be wondering, why do we need to check on the economic calendar? Of course, understanding the economic calendar isn't just about fundamental analysis, it's a crucial aspect of technical analysis too. And by checking on the economic calendar, we can easily identify potential correlations between key economic releases and specific technical patterns on the chart. And of course, we also have the privilege of knowing the timing of this major economic announcement, which can anticipate potential volatility spikes, trend reversals, or even breakout trading opportunities. So it's like having a roadmap that can guide our technical analysis decision. So stick around as we go through this together. So for today, October 17th, that's Tuesday, we have some impactful events that we are going to be looking at. Normally, we usually look at high impact events from economic dockets that affect the assets on our watch list. So basically, this week we want to be peeping into the UK and the US economic docket for insight into fundamental factors that majority will be looking forward to. So today we only have one high impact event, so I went on to include the medium impact event, as I can see that there are some events here that has a tendency of influencing the market sentiment. So the first event for today came in from the United Kingdom, and that is the average earnings excluding bonus, which came in about 4 or 5 hours ago, and the figures were of mixed reaction. We had a 7.8% on one, which was just as expected, and 8.1%, which was a little bit below the expectations here. And for those who don't know what the average earnings excluding bonus means, well, this is a data released by the National Statistics, and it is a key short-term indicator of how levels of pays are changing within the United Kingdom economy, and it can be seen as a measure of growth in basic pay, of course. And generally speaking, the positive earnings growth anticipates positive or bullish sentiments in favor of the pound sterling. So since the GBPUSD is part of the asset on our watch list for this week, we are going to be looking at how the market has reacted to this event, and are we also going to be taking advantage of the next course of action. Then we also have later on today, we have William John C. Williams, who is going to be having a speech later on today. John C. Williams is the president of Federal Reserve Bank of New York, and he also serves as the Federal Open Market Committee, bringing the Fed's 12th district perspective to monetary policy discussion in the Washington, D.C. Now, he's going to be having a speech by 12 o'clock local time here, so that's about 2 hours from now. And one thing we are going to be doing here is there's of course going to be an anticipation of this speech, which we shall be seeing on the chart too as price action. Then 30 minutes after, we are going to be looking at the release of the retail sales data, which is of course released by the US Census Bureau, and it measures the total receipt of retail stores. Monthly percent changes reflect the rate of changes in such sales, and this is widely followed as an indicator of consumer spending in the US economy. Now, this is a high impactful event, of course, and a higher reading is considered as a positive signal for the US economy, which will in the long run affect the US dollar positively. Now, if we look at the previous data here for the month of August, it came in at 0.6%, as you will be seeing here, and we have consensus projecting a 0.3% increase, which is a little bit on the lower side compared to the previous data. So we expected that there is a contraction there, which is not something that can influence the US dollar positively. But we are going to be looking forward to what the actual data is going to be saying here. Then we also have from the US economy the industrial production data, which will be coming up simultaneously with the retail sales data. And this shows the volume of production of the US industries such as factories and manufacturing sector. Of course, a high reading is considered as positive as well. Now, the previous data here came in at 0.4%, and there is a general consensus that the month of September's data will be at 0%. So you can see from the figures we have here, we really do not have a positive expectations as regards to the data we are looking at from the United States. So we want to see now, going to the market right now, to see how majority in the market are anticipating this event, which of course will transition into conditions like technical patterns and market structures that we can use to position ourselves ahead of these events. Now, we also have speeches from Bowman's and Bakken coming up later in the day, which as well too will be influencing the market sentiment. So with the information we have gathered here, let's dive right into the chart. So as usual, the first asset we are going to be taking on today is going to be the US oil spot. Now, okay, I'm waiting for my chart to load up again this time around. So let's see. Okay, here we go. So yesterday's trading session, the week has started on a not too good note as we saw price action hit our stop loss. Remember, we had a buy position triggered. Okay, let me take you through what really happened during our live session yesterday. So the first thing we noticed on this chart, that is on the 1 hour time frame, of course, was the fact that price action had been caught within a consolidation phase throughout the most of the early part of yesterday's trading session, as we saw price confined between the $86.60 level and the $85.90 area to emphasize the level of indecision at that point in time. And of course, you know how we use our flat channel whenever price gets caught up in this kind of scenario. We do want to exercise patience where we wait for either the breakout of the resistance line for buying opportunity or the breakdown of the support line for selling opportunities. And for the fact that price has been on a strong bullish momentum, at least since the later part of last week, we were of the opinion that this old choppy situation would incite an uptrend continuation pattern. And as a result of that, we positioned ourselves just right above the $86.60 level to capitalize on that uptrend move. And if you look at what happened here, price indeed broke out of that structure and moved about 40 pips in our favor before the sellers came in to take us out of that position in a loss. And if you remember vividly what I said here yesterday as regards to selling the US oil spot, that we will need price to break down, not only break down the $85.90 area, but retest the structure as a form of confirmation for us to sell. And this was exactly what happened. We saw the breakdown and retest the structure multiple times to incite the bearish momentum. And as you will see here, price action had moved over 100 pips before it retraced back into about 56 pips, which is currently going on right now. And at this point in time, I'll first of all congratulate those who took advantage of this opportunity. So it gave us the privilege of recouping the loss we made at the beginning of the week. But at this point in time, I will be advising you to move your stop losses right now. Let's secure this position as we want to see how the market will be playing out from this area. Now, with a well secured position, your secured position should be at your entry zone at this point in time, as price has really not moved significantly well. So with a well secured position at this juncture, what is going to be our next line of action? Are we going to continue selling the US all spot today, or are there chances that buyers can come in at any point in time to incite the uptrend continuation of the momentum that began last week? Now, before we go into the details on how to capitalize on the next line of action here, I would like us to take a quick look at the higher time frame so that we can have an holistic perspective into what has been going on in this market, and of course for those who missed out on the missed out from the live session of yesterday, you have the privilege of being on the same page with us. So the first thing we did yesterday was to run through the 4 hours time frame, of course, where we were able to identify an interesting setup that we said we will be using to guide our decisions for this week. Now, what we did on the 4 hours time frame was to take into consideration the nature of price action since the beginning of this month of October. Now, if you look at this month so far, you will see that price action has been nosediving, dropping, finding lower highs in that regard. And when we connected the series of lower highs, we have this beautiful descending trend line which has been supporting that bearish momentum. However, something interesting happened during the course of last week trading session as we finally saw price broke out of that descending trend line for the first time this month, and immediately price broke out of that trend line. We saw it go into a consolidation phase, and of course from a technical standpoint, when price breaks out of a trend line like this, we do expect that some point in time price will come back, retest the structure to incite the uptrend continuation, which was exactly what happened yesterday as we saw price break, retest the trend line, transitioned into a reversal pattern in the form of a double bottom structure, where we had the neckline of this double bottom structure around the $83.50 level, and as you will see on Friday, price broke out of that structure all the way to the upside to validate that reversal pattern. Now, there is another twist to this whole transition of price action since the beginning of this month. Now, remember we saw this small double bottom structure, then from a larger perspective, there is another double bottom structure which was spotted here yesterday. So we saw price drop into the $81 area, and the inability of sellers to break through this $81 level was evident last week as we saw price came back, closed down, but was unable to break down the previous low, hereby giving us another higher low, which transitioned into what looks like another double bottom structure, where the neckline of this particular double bottom structure lines up along that psychological level at the $85 area. And of course, that level there also is serving as our key level for this week, and we saw our price broke out of that neckline as well. So you can see we have two necklines that were broken, as you will see here. And one of the things I made mention here yesterday is that price is likely going to come back and retest one of these levels. It could come into the $85 area or the $83.50 level, where we shall be looking out for buy pressure, buying opportunity, buy setups in the form of buy pressure or reversal patterns around this area to join the uptrend move. And to give a visual representation of what I was talking about here, so I was saying price may come into any of this area, but the appearance of buy pressure will be all we need to join the uptrend move. Now let's look at what has been going on here in the last 16 to 20 hours. You will see that as soon as price got into that $85 area, we begin to notice some buy pressure resume around this area. Now the question going into today's New York session is, will the $85 level become a platform for more buying opportunities? That is, if buy pressure continues above this area, that is, sellers find it difficult to break through, then we want to be getting ready to join the uptrend move. However, if price breaks down the $85 area, then we want to be looking at the $83.50 level to look out for that uptrend continuation. Now, with the way things are going right now, it appears that the $85 area is beginning to build up some momentum in favor of the buyers. Now, if we also take into consideration what is going on, the dip in oil prices currently could be linked to recent reports suggesting a possible US-Venezuela deal, likely increasing global oil production. And if this deal works through, then there's going to be an increase in supply of oil, and when there is an increase in supply, what happens? Price is going to be crashing. Now, if this $85 level holds any selling pressure at this point in time and sellers find it difficult to break through this $85 area, we might be seeing an uptrend scenario. Now let's look at the lower time frame to see how we can actually position ourselves for the next move. Now scaling down into the 1 hour time frame, we will begin to see things more clearly. Now at this point in time, this is what I have here on the 1 hour time frame. So the $85 level has been witnessing continued buy pressure since in the last, let's see, 1, 2, 3, 4, 5, 6, 7, 8, 9 hours now. We have been noticing buy pressure around this area. So the only condition that will make us want to start considering selling here is for price to break down the $85 area first of all, then retest of structure on our lower time frame to confirm that buyers are finding it difficult to break back above the $85 level, and then at this point we do want to be joining a downtrend continuation. So this is the only criteria and condition that will make us consider selling the US All Spot today. But as long as price remains above that key level today, we will maintain a bullish bias here, and this is one of the reasons why I said we should all move our stop losses on the current sell position to break even while we continue to monitor price action here. Now, from the way things are going right now, I'm looking at a potential reversal pattern gradually unfold where we have the left shoulder, the head, and probably transition into the right shoulder to incite a reversal setup to incite an uptrend move, where the $85.90 level could serve as a neckline for this reversal pattern to push price up. So if I'm going to consider buying the US All Spot today, this level here, the $85.90 level, needs to be broken to the upside. So I want to see price break out, retest on my lower time frame, then I want to be part of an uptrend situation, and if price continues to climb and find new highs, then we have a buy stop order above the $86.60 level to capitalize on the uptrend continuation. So this is my view here on the US All Spot today. It's a simple setup we have here, as our center of focus today is going to be between the $85.90 level and the $85 area. So depending on the direction of the breakout today is going to be giving us an idea into where price may continue to during the course of today's trading session. So let's see how the market will play out from here. If you do have any questions whatsoever, or you need me to do some clarifications in a particular area, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds off to see if there are any questions, while you can also use that time to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions. All right. So, in the absence of no questions, I want to assume that we are all on the same page here, and in that regard, we shall be moving on to the next asset on our watch list. So the next asset on our watch list for today is the USTech 100, popularly known as the Nasdaq. And in fact, in the last 24 hours, we are not doing bad at all, as we already have a buy position running, which is running significantly well in our favor. Now, let's look at what really happened yesterday and what we did deliberated on, and how we said we are going to be capitalizing on any potential trading opportunities here. Now, during our live session yesterday, we acknowledged a range which emphasized the uncertainty at that particular point in time, as we saw price confined within the 15,065 level and the 14,980 area to emphasize the level of indecision at that point in time. And of course, whenever we have this kind of flat channel, we have no other choice than to exercise patience, where we wait for either the breakout of the resistance line for buying opportunities, or the breakdown of the support line here for selling opportunities. Now, one thing I made mention here yesterday, was that during the course of last week's trading session, we saw how that area around the $15,000 level and the 14,980 had played a major role in negating all attempt by the sellers to break down that structure. And I mentioned here that as a result of this observation, that we would need to wait for the breakout of the 15,065 level, which at the point of this session yesterday, it was serving as a resistance line, and of course the highest point price action was during our live session yesterday. So we had a buy stop order above the 15,065, and lo and behold, we saw price break out the structure, welcomed our first buy position, and we saw price move over 130 pips before this retracement began. And right now, price action is currently running with about 57 pips in profit. For those who took advantage of this opportunity, well done to you for being on standby to capitalize on this move. Now, with the way things are going right now, if you still have a buy position at this juncture, I'm going to encourage you to move your stop losses right now, and let's secure this current buy position. And personally, I will be suggesting that anywhere around that 15,100 level seems most appropriate to secure this position while we continue to monitor this price action here. Now, with a well secured position, what are our plans for today? How do we intend to strategically position ourselves for the next move? Now, before we go into the details on what to look out for, let's take a quick review of the higher time frame so that we can see things from an holistic standpoint. Now, let's scale up. I think we started from the daily time frame, and on the daily time frame, it was quite obvious that price action had been on a strong bullish momentum since the beginning of this year. And as a result of this observation, we can see that we have a couple of ascending trend line after connecting the series of higher lows, which has been supporting this bullish momentum. So we had the major ascending trend line and of course the minor ascending trend line, which is the thin dotted line on your screen. So our center of focus for this week is going to be the major ascending trend line, as you will see right here. Now, in addition to that ascending trend line is this key level situated at the 14,850 area, as you will be seeing right here. And of course, you see that since the month of June, this zone here had played a major role in negating all attempt by the sellers to break through that area. Now, to give a visual representation, you see what happened here in the month of June. We saw buy pressure. Fast forward to the month of July, we saw buy pressure here again. Fast forward to the month of August, another buy pressure. And in recent time, that is within the space of the last 3 weeks, we saw that despite the strong bearish momentum here, sellers found it difficult again to conveniently break down that 14,850 zone, as we saw buy pressure resume there again. And one interesting thing about the nature of price action in the last 3 weeks is the fact that it also shares a confluence with that ascending trend line. And if you look at what happened within the space of the 3 weeks, you will see how price action transitioned into a reversal pattern just right above the ascending trend line to give us something to work with ahead of the last couple of weeks, as the 14,850 now served as a neckline of that reversal pattern. Now, going into this week, we were looking at the possibilities of price coming back to retest the structure to incite an uptrend scenario, maybe, or even break down that structure to the downside to incite a strong sell-off. Of course, if price breaks down the 14,850 this time around, it will have also broken down the ascending trend line to incite a downtrend scenario, but that is yet to happen. So as long as price still remains above the structure, let's continue to look out for more buying opportunities at this point. So will price break out this descending trend line here to incite an uptrend? Well, to tackle that question, let's scale down into the 4 hours time frame. Now on the 4 hours time frame, we had a couple of setups here. One of them is the $15,000 area, where we noticed buy pressure resume again at the beginning of this week, as you will see right here. So we saw buy pressure resume above the $15,000 area, but a strong psychological level that is, considering the round figure of that price. So we saw something like another reversal pattern here, and that resistant line of that range at the 15,060 was a beautiful opportunity to join that uptrend move, and thank goodness we were part of this opportunity. Now, with the way things are going right now, we have price breakout of the neckline. Will price come back to retest the neckline to incite an uptrend, or are we going to be seeing an outright breakout of the 15,200 to incite an uptrend continuation? So I'm still looking forward to more buying opportunities here, as the sentiment, the market outlook is still looking very bullish at this point in time. Now, the only condition that will make me want to sell here is for this ascending trend line to be broken to the downside. So if this ascending trend line is broken, then I want to be part of a bearish move, breakdown retest to incite a downtrend scenario. So you do want to be marking out this ascending trend line. This trend line here has been supporting that momentum since the beginning of this month. So mark it out, as we will be needing it to guide selling opportunity if that trend line is breached to the downside. Now let's scale down into the 1 hour time frame. Now on the 1 hour time frame, remember we still have a buy position running right now, and the 15,065 area happens to be the neckline of this double bottom structure we spotted here yesterday. So let me show you what I'm talking about. So we have this one. So we have a double bottom structure right now, and price has just broken out of the structure. So like I was saying on the 4 hours time frame, are we going to see price come back to retest it, which interestingly lines up with this ascending trend line to incite another wave of bullish momentum? So that is one scenario that we are going to be looking at today to maximize the potential of this bullish move. Then another thing that we can look out for is if price does not drop into the 15,065 and instead it continues to find higher highs and higher lows, then a breakout of this newly identified resistant level at the 15,200 will be welcoming more buying opportunities here. So there are two ways to which we can capitalize on this one. For those who are with me on this platform for a while now, you know how we do it. But for those who don't know, let me explain things to you. Now, there are two ways, like I said. For those who are profitable, that is those who bought at the 15,065, of course, you will be profitable as soon as price gets into this area running with over 100 pips. So if you are profitable, you can afford to leverage on some of the profit you had made so far this week by placing a buy stop order above the 15,200. Now, if it doesn't work, you know that you're only risking some of the profits you had made so far this week. Now, for those who are joining us for the first time today, that is, you're coming from a clean slate, then I would encourage you to exercise patience as you don't have anything to leverage on. So what you are going to be doing here is to wait for the breakout of structure to happen, then wait for a retest of structure in our lower time frame to join that uptrend move. So this is how we are going to be joining an uptrend situation on the USTech 100 today. So I'm holding on to a bullish bias here, and we have two scenarios to join that uptrend move. Is either price drops into the trend line to incite an uptrend continuation, or we have a breakout of the 15,200 to join that uptrend move. However, in as much as we're looking out for buying opportunities, we cannot ignore the potentials the sellers also have in this market. Now, if price will be selling today, the only condition that will make me want to be joining the bearish move is for price to break down that ascending trend line. And if at this point this happens, then we want to be considering selling this asset. Now, a breakdown retest is all we need as a confirmation to join the decline. And if price continue to break down structures like the 15,000, 14,980 zone, we will be looking out for more selling opportunities. So you can see how this as a lighted ascending trend line is going to be playing a major role in determining how we're going to be trading today. If price remains above the trend line, we feel comfortable in our buy position, but if price drops below the trend line, then we want to be anticipating selling opportunities in this market. So this is my view here on the USTech 100 for today's trading session. If you have any questions or you need me to do some clarifications whatsoever, feel free to let me know in the comment section. So as usual, I'm going to be taking another 10 to 15 seconds to see if there are any questions whatsoever before we move on to the next asset on our watch list. All right. So, in the absence of no questions, I want to assume that we are all on the same page here. So, in that being said, let's run into the next asset on our watch list for today. So the next asset on our watch list for today is the GBPUSD, which is the cable market, and we begin to notice some strong selling pressure that has gripped this market in the last couple of hours. Now, earlier we enjoyed a favorable 60 pips movement in our direction before the market retraced. Well, recent reports from the United Kingdom indicated a slight easing in wage inflation for the month of August, which we talked about earlier. And of course, later today, all eyes is going to be on the US economic docket, where September's retail sales data will be taking the spotlight. Now, how do we intend to join this and how do we intend to capitalize on this one? Now, first of all, yesterday we had this situation going on here where price was initially caught within that range around the 1.21625 and the 1.21375 area. And of course, we were anticipating a bullish momentum as we waited for the breakout retest of the structure to capitalize on that uptrend move. And remember that we also added another position at the 1.21750 as we had a total of 100 pips. As you know, we had the first position here which ran with about 60 pips, and the second position here ran with about 44 pips before this old bearish momentum began. Now, if you look at the structure, if you had moved your stop loss, of course, you must have been taken out of this position with a moderate size of profit or at a worst case scenario break even, depending on where you moved your stop losses to. Now, right now, price action is back into the zone where it started this week. So you can see what we have here. This is the zone we identified earlier at the beginning of the week. We saw the breakout of that zone right here. And of course, you know, from a technical standpoint, when price breaks out of a key structure such as this, we expect that some point in time price may come back, retest the structure to incite an uptrend continuation. Now, with the way things are going right now, you will see that price is back into that structure. And in fact, I have a newly identified ascending trend line to work with for this week after connecting the series of higher lows. Now, this trend line here is going to be playing a major role in determining what our next line of action will be. And in fact, in the last 2 to 3 hours, we have noticed the breakdown of that trend line, which is a sign that we might be seeing a momentum shift at this point in time. Now, it not only broke down that structure, it even came back to retest it a couple of times, and at this point in time, it is looking very, very bearish at this juncture, as you will be seeing here. So for me to sell the GBP USD, anything below the 1.21625 is something that we're looking out for sell. As long as price remains below that area, and of course below that level, price has already broken down that ascending trend line. So let's see how far will this bearish momentum go, and if price action continues to drop, then we also have multiple levels that we can use to maximize this bearish move. So we have levels like the 1.21375, and we also have the 1.21250 to capitalize on the downtrend scenario here. So anywhere below the 1.21625 and the ascending trend line makes quite a lot of sense to sell the GBP USD. However, if it so happens that we get taken out of our sell position and then price climbs back above the ascending trend line, breaking out of the 1.21750, I'm of the opinion that we should get ready for the uptrend continuation. So we are at a crucial juncture in this market where this area between the 1.21750 and the 1.21625 is going to be playing a major role in determining the direction of where price action will be going. So let's see how this is going to play out. If you already have a sell position, well done. Ensure you have your stop losses just right above the 1.21750, which I think will dovetail to about how many pips that is. That's about 15 to 18 pips thereabout, which is not bad at all for this position. And let's see how far the bearish momentum will go. But if we get taken out of that sell position, then a breakout of the 1.21750 will mean that price action is back above the ascending trend line, and that breakdown there will turn out to be a false breakdown. So if it happens like this, let's wait for confirmations like retest of structure to join the uptrend move. And if price continues to climb high, then a breakout of the 1.22200 level will be welcoming more buy position here. So let's keep this in mind. Mark these levels out on your chart, as we will be needing them as a reference point to guide our independent trading decisions for today's trading session. So if you have any questions, feel free to let me know in the comment section. I will be taking the next 10 to 15 seconds off. Let's see if there are any questions whatsoever before we move right into the last and final asset on our watch list for today's trading session. All right. So in the absence of no questions, I see a comment, Dina. Good morning. Let's move on to the next and final asset on our watch list. So the next asset on our watch list is my favorite, and that is the XAUUSD, which is popularly known as the gold spot. Now on the XAUUSD, we have an interesting situation going on right now, as I have a buy position triggered after observing the persistent buy pressure that has been existing in this market in the last 24 hours. Now, in the wake of the Israel-Hamas conflict and the likelihood of the Federal Reserve maintaining an unchanged interest rate decision in November, the market sentiments is somewhat positive in favor of the gold spot. As you all know, majority in this kind of situation will want to be moving their capitals from currencies into safe haven assets such as the gold. Now, despite price action struggling to capitalize on the rebound from the 1908 that you will see here, there's still evident resilience that buyers may take over this market. Now, let's talk about what really happened yesterday and what led to the idea that we should be selling. Remember, we had a sell position initially, and let's look at what happened. So at the beginning of this week, it was more of a bearish momentum, as we saw the week started on a strong bearish note, though price was initially trying to establish a range here before we saw the breakdown of that support line there at the $1,918 level with a strong engulfing bearish candle. And one of the things I said here yesterday is that because of the situation we have, we might be seeing price drop to the downside in an attempt to do a retracement, which could be which is of course going to be as a result of profit-taking activities. Now, one of the things that further buttresses that was this impulsive move here, and with the way things were going when the week started on a bearish note, I was of the opinion that we might see price drop into the structure before the uptrend continuation happens. However, following the sell position that was triggered at the retest of the 1918 yesterday, we saw how sellers struggled around the 1915 zone. So every attempt by the sellers to continue to the downside here has been met with strong resistance from the buyers, which further emphasized the strong presence of bullish expectations around this area. And as a result of this observation, I did identify the 1915 zone as a temporary zone going forward, and that as long as price remains above this 1915, we shall remain bullish in this market, and the only condition that will make us want to sell is for price to drop and break down the zone, retest it to the downside to confirm, then we can join that move. Now, in addition to this old setup we have here is a simple uptrend continuation pattern, which is looking like an asymmetrical triangle. Now look at what we have here. We have the impulsive move and price action transition into a consolidation that forms this kind of pattern. And of course, when we have this kind of structure pattern on our chart, it's a sign that price will continue to the upside. And of course, we do want to be waiting for the breakout of the resistant line of that pattern to incite the uptrend move. And if you look at what has been going on here in the last 3 to 4 hours, price action had already broken out of that structure, which interestingly lines up with that 1918 level. Now, for those who took advantage of this opportunity, well done to you for being on standby to capitalize on this move. So you do want to be moving your stop losses to break even right now. Let's secure this current position. However, for those who had missed out on this opportunity, well, I will be advising you to exercise patience at this juncture, as we might need to see new structures emerge before we jump into this position. Now, what are the things we are going to be looking at to be part of this uptrend move? Now, the first thing I would like to emphasize here is this ascending trend line since last week Friday, after connecting the series of higher lows, as you will see here. Now, as long as price remains above this ascending trend line, we want to feel comfortable in our buy position. Now, if you had missed out on this breakout of the 1918, then you might want to exercise patience, waiting for price to come back, retest both the trend line or the 1918 level, where the appearance of buy pressure on our lower time frame will be a beautiful opportunity to join the uptrend move. So let's see how the market will play around this area. So that's one way we are going to be looking out for an uptrend continuation. Then the other one here is this 1923 level, a level which had been a strong selling niche at some point during the course of yesterday's trading session. Now price appeared to have broken out of the structure right now, and this is further emphasizing how buyers are gradually building momentum here, as they have taken out all the sell positions within the zone identified around this area. Now, with the way things are going right now, I would advise you to hold on for a retest of structure before you want to be joining an uptrend move to confirm this. But if you're already profitable, personally, I already have a buy stop order above the 1923 level. So if you're profitable so far this week, you can afford to leverage on that, and let's see how this is going to go. Then if price continues to climb, breaking out of the $1,927.50 level and the 1930 zone, we do want to be adding more buy positions to our existing trade. So on the XAUUSD, I want to hold on to a bullish bias here, considering the fact that it is a dependable safe haven. That is, the gold is a dependable safe haven, and majority will want to be keeping their funds in this particular asset. So let's see what happens here today as we anticipate the retail sales data, which is coming up in about 2 hours from now. However, in as much as we're looking out for buying opportunity, you of course know how we do it in this community. We also want to keep tabs with the potentials that sellers could also come in. And what is the condition that will make us negate the idea of buying and jumping into a sell position? Well, for me to sell the XAUUSD today, I would rather want to see price action take out all the buy positions around the $1,915 zone. So I want to see a breakdown of the structure, and if price breaks down this temporary demand zone, price will be back within the seller's territory, which is emphasized by this descending trend line we have here. So if price drops below the temporary demand zone at the 1,915, we want to be getting ready to sell. Now a confirmation is needed, retest of structure or retest of this ascending trend line. Just one important thing we want to be seeing here is the inability of buyers to break out of that ascending trend line, which will reflect on the chart as continuous selling pressure. Then we want to be part of the bearish move to the downside. Then a further breakdown of the 1,908 will welcome more selling opportunities, breakdown of the 1,900 level as well. So typical target for sellers still remains within that zone between the 1,900 area and of course the 1,880 level. So at this point, I'm still holding on to a bullish bias, like I said earlier, and I doubt if sellers will come into this market. But if they are going to be coming in, then I would need a breakdown of this demand zone for me to start considering selling. So you do want to be marking out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions. And don't forget to mark out these levels here, as they will be giving us a privilege of capitalizing and maximizing the potential of that bullish move that we have here. So these are my views on the XAUUSD for today. It has been an interesting experience with you guys this morning. Let's see if there are any questions before we round off for today's trading session. So I will be taking the next 10 to 15 seconds to wait for your questions, while you also use that time to mark out these levels on your charts. All right, so in the absence of no questions, I want to assume we're all on the same page here. And on this note, we round off for today's trading session. So today we were able to attend to 4 major assets, which includes the USOILSPOT, the USTech100, popularly known as the NASDAQ. We also took on the GBPUSD and then the XAUUSD, popularly known as the gold spots, and all of which we were able to identify simple trading setups using fundamental tools such as trend lines, key levels, and chart patterns to gain insight into the market structure and use that information to strategically position ourselves ahead of the New York session today. So I just hope that we marked out those levels on our chart, and let's exercise patience and allow our structures to mature before we jump into any positions. So I wish us all the best of luck. For those who joined us for the first time today, I do hope you are able to gain one or two things from what we discussed here today. And in fact, I do encourage you to be part of our subsequent editions, as the more time you spend with us in this community, the better you get to understand how to use our strategy and eventually be able to make your own independent trading decisions using these tools. So I look forward to seeing more of you tomorrow, 10 a.m. UTC, 11 a.m. West African time, as we come here to review how well these assets have been doing and, of course, get ready for tomorrow's trading session. So on this note, I wish us all the best of luck, and don't forget to have your risk strategy, your risk management plan in place, as you definitely need to always ensure that you have your stop losses and risk a reasonable amount of your account size that will not affect your emotions if the market goes the opposite direction. So do have a wonderful day, everyone, and I look forward to seeing you same time tomorrow, 10 a.m. UTC, 11 a.m. West African time, as we come here again to review how well these assets have been doing, and at the same time get ready for tomorrow's trading session. Do have a wonderful evening, everyone. Bye bye.